Hi everybody, it's TJ with 7 Summits Trader Pro. I want to go over the last few sessions with our crude oil trading. And even if you're a Forex trader and you don't trade crude, I recommend that you watch this video anyway because the trades are the same, but also you may want to trade crude at some point, something to aspire to. You could build your account up trading Forex. And as you master your trading, move into an exciting market like crude oil, which is extremely profitable. Just within the last 2 weeks alone, crude oil in our little modest trade room has racked up well over $6 in profits. And if you don't know what that means, every dollar is $1,000 in profits. So in 2 weeks, it's made over 6 grand. And we're talking about trading maybe an hour, 2 hours at the most, sometimes quite a bit less. So let's just go through the setups, and you'll see how this works exactly the same, whether you're trading stocks, Forex, ETFs, futures, doesn't matter. This is one of the oldest trade plans. It's one we've been using now for well over 2 years. Also, we've adopted a unique innovation. This was brought to us by one of our more experienced members, John Huckle, and we've adopted his trade plan because it is so effective. And what he did was actually learn the SST, which is what many of you are now endeavoring to do. And once he mastered it, he decided that he was going to try some of his own ideas, and in so doing, he made the SST Pro his own. He used the tool to become a more profitable trader with some innovations that are so nifty and so effective that we are now using them in the trade room. One of them is a fast exit with the EMA. This blue line here is not part of the SST. This is an EMA, an exponential moving average, set to 6. Basically, the EMA allows us to exit the trade quicker. If we're in a long trade and the EMA closes below the trigger line and the bar closes below the trigger line, we look to exit sooner. And that way we can cut our losses. And we also go to the third target instead of the second target. So those two changes have really improved the overall results of our trading with crude. Let's walk through the last few sessions. Okay, this was Tuesday, coming back from the 3-day weekend. The market was really slow. It was barely moving. This setup here was back at 8:30. Only a few bars passed for 30 minutes. We started at 8:50. We didn't get our first setup. Well, we got this one at 9 o'clock on the nail, and notice how it came up and just touched the entry. But we made a little adjustment because we're always looking to make 1 or 2, maybe 3 ticks at the most, adjustments to get around a swing level. The swing level was at 6.7. You can see our entry was at 6.6. So we adjusted up to 6.8. Sure enough, it came up, touched the entry, but it failed to get higher. And that little 2-tick adjustment saved us from a losing trade. Okay, that's part of the trade plan. That's just part of what we do. 5% art of trading. So instead, we got a short. It came 2 minutes later, and that was at 95.47. Now notice that it's in pink. If you're an MT4 trader, you're not going to have colors. If you're trading Forex, you just can't do it with MT4. But you have the OSOB. Notice that the market is overbought. Got the red spikes in the OSOB. You got the close below the orange line right there. And the close below the trigger line. So you don't need to see that it's a pink trade. You should know based on this criteria that it's a reversal trade. And regardless whether you know or not, the calculator knows, and it already knows how to calculate the trade. It's going to be the same regardless of what kind of setup it is. The important thing is that it's tuned to market conditions right here in real time at the right edge of the chart. Okay, that's how it works. So it triggers in, pushes lower, a little while longer, it gets down past the first target. That was 4 minutes later. 3 bars in 4 minutes is kind of slow for crude oil at this time of morning. At the first target is when we move our stop down to lock in a tick of profit. That takes the risk off the trade. I mean, that's a pretty profitable move already, down to 95.30, right? 95.47 down to 95.30. That's 17 cents. That's a $170 move per position. But the full target is all the way down to 95.16. Far more profitable. And quite often we're going to get that full target. So we stay with the plan. We don't try to scalp out. We just stay with the trade plan. And it looks like it's going to head lower. It tries to get below 95.30, and it just kind of hangs out there. 1, 2, 3, 4, several bars, all the way until 9:13. I mean, we're already in this trade over 10 minutes. Cannot break through. And instead, it spikes up and ends up stopping out for one tick. I mean, that's why we have our protective stop. So we take our one tick. We need one more winner for power of quitting. So we have a long at 95.52, and we just got to take that trade. And instead it cancels. And then all of a sudden, we get to our stand down time at 9:25. And then we just wait. We're pausing until 9:35 because we notice that's a 10-minute time in the morning when the U.S. market opens that crude oil can be really choppy. And you can see that it is pretty choppy. And by standing down, we've saved 2 losing trades. This one goes long, stops and reverses to short, and then comes out and stops out. So our trade plan rules save us. And we see this quite often. Then we get this trade at 9:40. Short at 95.22, targeting 94.84. And that one goes the distance. No problem getting there. We trail it all the way down, and it comes even a little further to here, all the way down to 94.46, and then on the next bar right here it stabs up, and we're out of the trade. And that's it. I mean, that was what she wrote. 2 trades. The first winner was 1 tick. The second trade got 35 cents to the full target for $350. We trailed down for another 73 cents, 730 more dollars. And in 2 trades, we're done with $1.10, 110 ticks, or $1,100 in profit. Basically, about 45 minutes of trading. And we're done for the day. That was actually Wednesday. I know I said earlier it was Tuesday. This was yesterday. Tuesday, we actually had 4 trades, 2 small losses, and 2 winners for 61 cents or $610. In fact, let's go back and look at that now because I'll show you some great examples of the EMA exit and how it helped us keep our losses small and enabled us to finish the session with a really strong finish. All right, so if yesterday started slow, you can imagine that Tuesday started even slower. We had this really nice short trade that led into our session. This was all before we started. And I really don't like seeing a winner leading into our first trade of the day. Maybe I'm superstitious. But anyway, 9:10, we had to wait 20 minutes until we got our first setup. And this is a reversal to the long side. Again, you've got the oversold condition with the red bar here and the close above the orange line. That's your reversal setup. Close above the trigger line. So whether this is colored pink or not doesn't matter. So if you're an MT4 user, this is what you want to learn, the OSOB. All right, so anyway, 96.61, and it didn't quite get to money management. Money management was at 96.79, and it got as high as 96.77. It missed by 2 ticks. Meanwhile, the stop moved up a little. It even moved up a little more, but we were unable to lock in 1 tick. Didn't quite get there. But what happened was the EMA came down and closed below the trigger line along with the price bar. So this is our cue to exit the trade. So you can either mark it out right then and there, or what we've learned, 80% of the time it's going to at least come back up, if you're patient, and touch that EMA. So I usually like to wait. I mean, if it's moving down hard against me, I know I have my stop in place. There's already been a reduction in risk. So I want to wait and see if I can get it to come back up. And when it comes back up and touches the EMA, that's when I'm going to mark it out. And that's exactly what happened. And so we got out losing only 4 ticks. You know, 4 ticks per position on 2 positions is 8 ticks. I mean, that's nothing compared to the size of trades that we're winning, right? So if we can keep our losses small, we're in a good position. And it saved us because it came down and ultimately did hit the stop. So we saved money by getting out early. We lost 4 ticks instead of what would have been from 61 down to 44, 17 cents. 4 ticks or 17 ticks. That's a significant savings. Instead, we got short. Okay, this is after the pause time. Again, really slow. Got short on a re-entry trade, which is colored in yellow. The reason why it's a re-entry trade is because it stayed below the OSOB the whole time. The OSOB never did get above 0. And so any more short trades are going to be yellow re-entry trades. This is all discussed in the training. You don't need it to be colored yellow. If you want to know what kind of trade it is, you just look at the OSOB, learn how the re-entry trades work. Okay, and it's all there for you. Regardless, the calculator knows. You take the setup, 96.34 going to 96.02. This one does get to money management, so we're able to move our stop, just gradually going down, but then we have this big move down. We lock in a tick of profit, and it gets to full target, and the trailer continues to go lower and lower. Now, once we're profitable, we don't use the EMA exit anymore. We just follow the dots. We're only using the EMA exit to get out of the way of a trade that has a high likelihood of failing. And that's what the EMA does for us. Not perfect, but it's the next best thing to perfect. This ended up being a great trade. Got out here at 95.97. 40, let's see, it got 32 cents on the full target and 37 cents on the trailer. Now, you know, maybe that's a good time to quit. It's a real slow market. We lost 4 ticks, a total of 8 ticks on the first trade, but we gained 69 ticks on the second trade. That's a 61-cent profit, $610. But if you're going with the full power of quitting, you would take the next trade, and that would be, well, not this one. And why not? You should know that we're going to make a small adjustment around the swing level. The swing level is at 95.80. The entry is at 95.82. I'm going to make a 3-cent adjustment because I don't want to get ticked into a trade that then turns and goes the other direction. The support level has proven to be pretty strong in crude oil on the 10s. Okay, so we got one more tick to break through. It didn't happen. We save a losing trade. And instead we get long. And we also make an adjustment around this level. The entry's at 96.02, but that's exactly where the high of these two bars are. So we get in at 96.03. And it gets in. And it doesn't quite get to money management. Almost. But now it's under pressure. The stop's moved up. Remember, this is a really slow market. The EMA is getting closer to going below the trigger line, but it hasn't done so yet until this bar right here. Notice the trigger line is at 99. The EMA is at 98. And the bar closed below. This is our cue for an early exit. We don't panic. We got our stop in place. Let's see if it'll pull back. And it does. It pulls back, and we're able to get out of that trade with only a 6-tick loss per position. Anytime you get a single-digit loss in crude oil, you are managing your trade in a fantastic way. I mean, sometimes you're going to get full losses. That's going to happen. But you mitigate and you avoid as many of those as possible. Look how choppy the market is. And yet we avoided a losing trade, and we took a small loss for only 6 ticks. We still need one more winner of any amount to give us our power of quitting. 2 winners, one of them being a full target and then being positive. Well, here's a case where the early exit ended up hurting us a little bit, right? Because it ended up getting to money management. It would have stopped out for only 1 tick. And that would have been power of quitting. So you might decide, okay, well, I'm using this discretionary exit plan, but the unadulterated system had power of quitting. I'm stopping. And if you want to trade like that, you can. That's a perfectly legitimate way to trade with power of quitting. Or you might just decide, nope, I still need a second win. Okay? So you take the next trade. And it's a short right here. Another re-entry. This time, still, the market's really weak. The OSOB has not gone above the zero line at all. And so the next trade, again, is this time it's an orange re-entry. The last trade was an orange re-entry also. It was not a pink re-entry. When the market's oversold, we ignore the pink re-entries. The calculator knew that. You see, it had to go below the orange line, which it did. The orange re-entry. And it gets to money management. The stop moves down, locks in a tick. It moves lower. We move our stop down. We move our stop down, but ultimately it stops out. And it gains 6 ticks per position. So this winner offsets this loser. And in the end, we wound up with 61 cents. Not bad. All right, so let's jump to today's session. I realize this video is a little bit long, but this was a really great session. It was another slow day, and I just want to show you sometimes how the most comfortable trade ends up being wrong and the least comfortable trade ends up being right. So it's really important to be neutral and unattached psychologically to your trade decisions. You have to be ironclad with your belief and your confidence in the trade plan itself. Okay, and that just comes with time and repetition. Because on this trade, you had an entry at 9,574, and the swing level was 9,570. That's going to require a 5-cent adjustment, and that's just too much. 3 ticks is the most we're doing. 5 is too much, because what if you're wrong? What if it breaks out and still goes against you? You're giving up an extra 5 ticks per position. And look what happened here. It did break through, and you would have got triggered in. This is your classic false breakout. It looked like it's going to go. I mean, when this happened and it's moving lower and lower, you're like, oh, great, this trade looks really good. But it wasn't. It went against us. And we couldn't even use the EMA exit. Instead, we had the stop and reverse. And I know this makes a lot of people uncomfortable. Sometimes a stop and reverse could lead to, a couple losses in a row, maybe even 3 losses in a row. And that will happen sometimes. But, it's all about putting the odds in your favor on every trade. The stop was way up here on the yellow trade, on the re-entry trade. The stop and reverse got us out of that trade way down here. It lost 14 cents per position. It would have lost double that. Okay, so now we're long. And this is our second trade of the day. We had a small loss. We are long. Look at this one. It jumps all the way up to money management. We lock in a tick, and we now have a free trade. This is looking like a choppy market so far. When you see the channel snaking along up and down like the Snake River, it could imply some choppy price action. But that's not what happened. I mean, we really don't know what's going to happen on the right edge of the chart going forward. It looks choppy. But you never know when it's going to change. The thing is that the trade plan and the system is giving us a profitable result more often than not. Over the long period, we're really growing our accounts dramatically. So you just stay with it, and you stay with the trade. And look what happens. It pops up, not quite to full target, but the stop moved up a couple times. We have a good amount of profit locked in. And then finally, when it looked like it was going to stop us out, instead it went the other way and it hit the full target. That full target got us 43 cents. I mean, that's a $430 move. We lost 14 cents, picked up 43 cents. The second position, still going and going. Now, if we didn't stop and reverse, we would have been in a losing trade and missed a winning trade. A big winning trade. Got to remember that. These are trades you need to practice. I mean, that picked up 90 cents. The runner. 43 cents on the fixed target. That's $1.33. $1,330 move. This one trade alone. We still need another winner. So we pick up the next trade. This is a basic setup. That one stopped out right here. Grabbed 8 cents on both positions, and we ended up with $1.21 for the day. That's $1,210. So we're up close to $3,000 this week. We were up over $3,600 last week. Just 2 weeks since the SST Pro's final release. And we were done. All right, everyone, that's our crude oil trading. This is TJ with the 7 Summits Trader Pro and NetPicks.com. See you on the next one.